Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. Today what we're going to do is we're going to look at the uranium price performance on a 1-month time frame and a 1-year time frame. We're going to see if the outperformers on the 1 month are also the outperformers of the 1 year. And what that can tell you is that maybe investors are flowing money into these particular companies because they think they're the best companies, or because maybe they prefer those companies over others for whatever reason. My bias has been from the beginning of this market is that the high cost producers, and this is just what happens with any commodity, when the commodity goes down, it goes below the cost curve of the high cost producers. People look at that and they say, I don't want any of the high cost producers. They could go bankrupt. They're not going to make any money. There's extreme negative sentiment towards the high cost producers. So those get bid way down. And people favor the low cost producers because they're, quote, making money right now. They have cash flow, whatever reasons they want. So all these ones get sold off that are high cost producers. But when you look at an earnings per share, and there is more risk in high cost producers, that when the price goes up and it goes above the high cost producers typically fly and surpass everything else, because they go from the most undervalued state and then eventually to the most overvalued state at the end of the commodity bull market. So I kind of overweighted the high cost producers. I overweighted Bannerman, Goviax, Deep Yellow, Forces Metals. I got in a little bit later. That was a recommendation from one of the people on the channel, and thank you for that. I also went into Global Atomic. I went into all those ones that I thought were pretty good bets. I stayed away from, and guys, this is not recommendations. You don't have to follow me. Just keep that in mind. I went into the Canadian exploration companies because high grade, if they could find some easy to mine locations, I would think that would get a premium during the uranium bull market. I'm not too keen on a lot of the American producers outside of Encore Energy. The other ones, I mean, they're good, I'm sure. I just don't have that. I don't know. I don't have that want or need to have a large position in them. I do have some very small positions in a lot of these companies. I just don't have an overweight to it. So I overweighted the African companies in general, and I overweighted a few Canadian companies. I overweighted Next Gen Energy because they have a really good asset, and if they can pull this thing off, they're going to be printing money. So that is one I do like in Canada. I also overweighted Fission because it was down, and they do have a good deposit, and I think it'll be easily mineable. So that was another one I overweighted. I overweighted Baseload as well for an Explorer, just because I like that exploration company. So keep in mind that I have only 20% of my entire net worth in these speculative investments, which include all of the commodity groups. So it's only 20% of my net worth. These are extremely volatile. And going forward, these performance gains may not match expectations. I am doing this for fun. I'm looking to see what outperformed on the 1 month in the 1 year and see if they correlate. Because if they all correlate, if all the 1 year are the best performers and they're the best performers on the 1 month, then we should probably be getting some money in them. But I think they're probably going to be varied a little bit. And again, each position in my portfolio is 1 to 5% of the total portfolio. That's all I limit it to. I don't dump all my money. I have zero margin. These things are incredibly volatile. You go in on margin, more than likely you're going to get caught in volatility and it's going to throw you out. That's what you don't want to do. A lot of these are extremely volatile, and you're going to have to stomach the volatility. I'm so used to the volatility, I'm kind of unemotional to it. So it doesn't faze me. If it phases you, you're going to have to take a different approach. But I want to go over the price performance here and show you kind of what's going on. So what I have here is this upper area here. is the 1 month. I boxed in what I thought was some really good performers. The black boxes are the highest performers on the 1 month time frame. So looking here, we've got Goviax up 94% in 1 month. Incredible. And I've got this red box here. This is a good 1 year performer who also performed pretty well on the 1 month time frame. 52% is pretty good, but 94%, wow. Now we've got Encore Energy. The green ones are ones that performed well on the 1 month and also the 1 year. I overweighted Encore Energy in the beginning. I even created a separate presentation for it, but that one's doing incredibly well. It doesn't have much overhead resistance. So I think it will continue to do very well because of those conditions. Some of these other companies, like Deep Yellow, is still trying to get through resistance. So it may underperform a little bit on the short term and even the long term, 177%, before it's still trying to break out of that sticky area. So once it breaks, that may outperform. So it's difficult to kind of use just the price performance levels only. But Bannerman has been, it had a banner month. Bannerman with a banner month at 100% return. Incredible. Boss Energy is another one that's done very well, 75% up. Very good move. Sky Harbor, 71%. Pretty dang good. Fission, great performance at 90%. And Fission 3.0, 100% gain. We've got the United States on the 1 month not performing that great. They haven't been the best performers. Looking at Peninsula Energy, not too bad. Asian Court, pretty good. Pierpoint, pretty good. Laramide, not too bad. We've got UEX Corporation putting in some good work on the 1 month. We've got Consolidated Uranium doing okay. ISO Energy killing it and is actually up the most of anybody on a 1 month, 124%. One thing I want to show you is the Sprott Physical Uranium Trust is actually outperforming Camco Corporation. So that's one that is pretty crazy. It was up 55%. It's also outperformed some of these other ones as well, if you look. So looking at this, I would say Sky Harbor, Fission 3.0, Fission, Encore Energy, Bannerman. I like Bannerman a lot. That's a good one. Boss Energy. Now let's go to the 1 year. The 1 year, we've had Goviax, which was good at the 1 month level. That's why I put this little box here. We've got Global Atomic killing it at almost 500% in a 1 year time frame. Uranium Royalty Corp's done pretty well, almost 300% up. So those are the ones that I like. Encore Energy's done very well on both the short term at 62% and the long term at 302%. That is a solid play. Now, Bannerman, 566% on the long term and 100% on the short term. Great move in Bannerman. Forcis Metals is another one. And looking up at Forcis, it was up 37.5. So it kind of underperformed in the short term, but has done very well in the long term. Let's monitor that and see if it continues. Deep Yellow, I do think will do well after it breaks through its resistance. It's still stuck on a long-term resistance line. Forcis Metals is as well. So it went all the way up to resistance and it's getting stuck, and we can see that in the performance of these two companies. Looking at the guys over here on the 1 year, Next Gen Energy, solid performance, especially when you look at the risk-adjusted return. I think this is probably one of the lower risk plays, and it's done very well On the long term, and even on the short term, it hasn't done horribly. Sky Harbor was another one that's done decent. It's also done pretty well in the short term. That could be one to look into if you want an explorer. I would be looking at that one. That just broke out of its resistance area, and I think we're right at another resistance area right now. Looking at these guys, not a lot of huge performance outside of Energy Fuels, and I put in Uranium Royalty Corporation. Denison Mines is kind of middle of the area here. That's not too bad either. Denison Mines on the short term, these guys are kind of all underperforming on the short term in comparison to the physical spot price. So what I think kind of happened is we're coming into resistance for some of these American companies, and maybe they already had a run-up and they had resistance, but we don't see the huge run-up. When Energy Fuels had a huge run-up, but it's coming into some resistance. Energy Fuels. Looking at these guys over here, basically some underperformance. I do think Laramide might get a little bit of a boost coming up because it's breaking through some resistance area. Centrus Energy's done all right. Not too bad, kind of in the middle. Looking up here, Asian Cort's probably the best here on the short term. Same with Pierpoint. Some of these other ones have been a little bit, they've done all right, especially on the 1 month. All of these have done pretty well. Looking at the ones here on the 1 year, Consolidated Uranium, this one's done very well. 311% is a very good return, and it's done well in comparison to all the other companies. Forum Energy Metals has done pretty well, 236%. UEX is pretty well too. Going on up, UEX has done very well in the short term. Consolidated Uranium's done okay. Baseload's kind of underperforming on both of those metrics. And looking at ISO Energy's done very well on the 1 year term and also the best in the 1 month. Now, keep in mind, everyone, these are not necessarily predictions, but they do tell us some information. The ones that I would be looking at personally to add into, if I'm looking to add into it, are ones that are stuck at resistance and that are about to break. Ones that have been kind of held down. So Fission just broke through its resistance level, I would say. Deep Yellow is still held behind, like kind of down. Laramide's kind of down. Those two there. Forces Metals, that one I added into recently. Those are some of the ones that are kind of held down by some resistance. Boss Energy was also one that was held down that just punched through it. So we saw that outperformance. If we go back here on Boss Energy, it's right here. It had a 200% increase here. And then if you look up here, it really punched through and did a 75% increase. So I think Boss Energy might be gaining some momentum as well. So that might be a good one to look into. But again, guys, this is just my financial opinion. We're just looking at price performance. It does not indicate future performance. Keep that in mind. The ones that I like to look at are the ones that are trying to punch through resistance. They're stuck. Because what's happening is other ones are realizing the value, and the value hasn't hit, quote, the laggard yet. And once it punches through, it may catch up. You might see a quick revaluation of those companies. Again, we might not. And that's the difficulty of knowing a commodity is underpriced, knowing that uranium is underpriced in relationship to gold and other commodities. We're under the cost curves. There is an art between finding that value and choosing vehicles that are successful in converting value to shareholders. There is a huge, there's an art to it. Sometimes bad companies do good, or companies that are perceived to be bad do incredibly well. Some companies that are perceived to be good don't perform as well. And then you also have to look at the risk-adjusted returns. How much risk are you willing to take to try to get that return? And what if it doesn't pan out? So on a lot of these things, if I know that something's going to go up a lot. Sometimes you take the least risk bet. You just buy the physical uranium and ride it higher. There's not much risk in that approach. When you start converting things into exploration companies, there's a lot of risk there. In the developer companies, there is less risk than the explorers, but then there's technical risk. There's risk of developing these mines. There's risk in terms of the countries they're in. There is a lot of risk, but that's where I like to overweight the companies. Now, if you look at some of these companies, a lot of them are developer companies that are doing very well on the short term and on the 1 year. So the 1 month and the 1 year. There wasn't a ton of explorers. I mean, there's some, Sky Harbor, Fission 3.0. There's a couple that are up there, but they're not outperforming on the 1 year. You might see producers do well in the beginning, developers go next, and then the explorers at the end. You might see those and that money start to rotate versus different things, different categories. I can't tell you exactly that is the order. It usually is that order. Usually the explorers go crazy last, but not all the time. So what we're seeing is the developers really start to kick up here. We're seeing the high cost companies really start to boost it. And perhaps the explorers are next. The explorers that I do like baseload. Canalaska's pretty good. Sky Harbor's good. Standard. Oh, I forgot to put Standard in here. Standard Uranium's good. All these Pure Point Uranium, Fission 3.0. I like all those companies because if they find something that is easy to mine with a high uranium concentration, it's going to be very valuable going forward. So I prefer the Athabasca region that are outside the sandstone areas. And if one of them can just find something, and hopefully they hit something big, then I'll be covered because I put a little bit in all of them. If you guys like this content, give me a thumbs up. Let me know if you guys want to hear anything else. Put it in the comment section. I'd like to know what your guys' opinions are on what you want to hear about uranium or any other commodity. Like to know what you guys want to know. And thanks for listening. This is Finding Value.